the macroeconomic landscape for Bitcoin, BTC, could become more difficult to navigate as the U.S. Federal Reserve continues to raise interest rates. However, Bitcoin is the only way to transition to a new monetary standard, panelists at a discussion on the current macro backdrop at Bitcoin 2022 have argued. Opening up the discussion, Dr. Jeff Ross, founder and CEO of Vailshire Capital Management, urged the audience to get mentally ready for what could happen to the Bitcoin price in the short term. Bitcoin is still strongly correlated to the stock market, he said, warning that planned rate hikes by the Federal Reserve, Fed, could translate into lower stock prices going forward. However, Ross still said that Bitcoin remains a viable way to store value and save money over the long term, given how he expects fiat money to decline in value. People will flock to Bitcoin because they need to preserve their purchasing power, he said. Ross further added that the value of Bitcoin over time approaches infinity, and said that MicroStrategy CEO Michael Saylor is right when he said that it's going up forever, Laura. Meanwhile, Mark Moss, a popular YouTuber and Bitcoin advocate, said that we're witnessing a technological revolution. Nations don't trust each other and people don't trust their nations, Moss said, noting that a decentralized ledger is the best way to fix this. Similarly, other panelists, including Jeff Booth, a technology entrepreneur and author of the popular book The Price of Tomorrow, said technology is a driver for change today, and that it has always been a driver. This is something that Ray Dalio misses when he speaks about the end of the long tail. Ray Dalio is a famous investor and co-chief investment officer at the world's largest hedge fund, Bridgewater Associates, who has become known for his extensive work on debt cycles. According to Jeff Booth, the current fiat money system means that wealth is continuously transferred from the poor and middle class and to the rich. Technology is deflationary, but the Fed is trying to counter that by printing more money, he argued. Booth further opined that this inflates asset prices, which benefits owners of the assets, while people who don't own assets pay for it in the form of higher prices on everything. This is not how the free market is working.